Okay, good morning everyone. Thank you to today's weekly roundup from Lewis Brownlee. I'm Sarah Alexander. I'm the Managing Director of the firm, and I'm going to be joined today by Tom Foster, who's our Tax Director. I've been doing these check-ins for a few weeks now. I'm just giving you sort of updates on what's been happening. And obviously this week, the big news is on Wednesday, it was the budget. So we're going to be slightly more formal in the approach today. Tom and I are going to talk you through what was said on Wednesday and our interpretation of it. So the Chancellor presented his second budget on Wednesday of this week. In his speech, he stated that his budget meets the moment with a three-part plan to protect the jobs and livelihoods of the British people. He spoke for about 51 minutes. Apparently that's the joint shortest speech in budget history. The other one that was 51 minutes was Gordon Brown back in 2007. Just a bit of trivia there about maybe for a quiz later on, another lockdown quiz, maybe throw that in.
They were both quite interesting budgets as well, bizarrely.
Okay. So budget on Wednesday. The proposals will then be more formalised when the 2021 Finance Act is published on March the 11th. And then there is going to be a tax day on the 23rd of March when the Treasury will simultaneously publish a number of consultations regarding tax policy. So that's new.
Yeah, that could be quite interesting as well, because we, like you said, we haven't had that before. And it seems to be a new concept where they're going to be opening it up potentially even to professionals, I'm hoping, like our institutes, to have a say in what direction the government takes things in certain areas.
So for now, we'll talk about what we know, what things are probably going to be changing throughout the rest of the month and beyond. Okay, so some coronavirus support measures then. Coronavirus loan schemes. So in 2020, at the start of the first lockdown, the government introduced a number of government-backed coronavirus loan schemes. In December, those were extended until the end of March 2021. So those were the bounce back loans, the coronavirus business interruption loans, and then the coronavirus large business interruption loan scheme. So there were three different types of loans that were all been extended to the end of March. They will come to an end at the end of March in terms of the ability to access those loans. But from the 6th of April, there will be a recovery loan scheme, which will be providing lenders with guarantees of up to 80% of eligible loans between £25,000 and 10 million. So to give the lenders confidence of the continuing to provide finance to the UK businesses. So that should mean that as we hopefully enter a period of the unlocking of lockdown, businesses will be able to access finance backed by the government to enable them to move out of this period. Cash flow is going to be so important. I've talked about this a lot on these courses, and I talk about it a lot in the business and with our clients. If you're going to access funding, it's really important before you do that, you look at what your projection is going to be beyond, so what you're going to use that cash for, but crucially, when you're going to need to start to make those repayments, can you afford to do it? Last year, a £50,000 bounce back loan, which was going to be repaid over 6 years, equated to about a £900 a month payment. So pre-lockdown, could your business have supported a repayment of a loan of that value? But it's really good news that funding is going to be available and backed by the government to help businesses recover from this period of time. So restart grants. So these are going to be provided in England, value up to £6,000 per premises for non-essential retail businesses and up to £18,000 per premises for hospitality, accommodation, leisure, personal care and gym businesses. So again, this is a grant now this time, so this won't need to be repaid. So we'll be giving you some certainty of some income that's coming in the future. They will be taxable, you must remember that. The eligibility of these grants will be that you're based in England, that you occupy premises on which you pay business rates, and you've been required to close for at least 14 days because of the restrictions, and you've been unable to provide your usual in-person customer services from your premises. So you won't receive the grant if you continue to operate, if the restrictions meant that it was less than 14 days that you closed for, and if you chose to close. So if you chose to close and you could have carried on, you won't be eligible for these grants. And you'll apply for those via the local authority. So some of the previous grants related to rates automatically came. These ones you'll need to apply for, and I guess need to be able to prove that you've been affected by lockdown. And I think these grants are good news, but they're linked to rates. So if you're a small business that doesn't have premises, then you're not going to be able to access these particular restart grants. So yeah, good news for some, but not everybody if you don't have premises. So business rates more generally. So business rates, all 4 nations have introduced 100% business rates relief aimed at retail, leisure and hospitality businesses. So if you're in that sector, you won't have paid any business rates from April last year to the end of March this year. And that's going to continue 100% business rates relief for eligible businesses up to the end of June of this year. And then that will be followed by a 66% business rates relief for the period from July to March next year, capped at 2 million per business properties that are required to be closed on the 5th of April, or 105,000 per business for other eligible properties. Nurseries will also qualify for relief in the same way as these other eligible properties. So again, good news for those that have got premises, but those businesses will still have had other costs beyond rates that they've had to have funded over this last period of time. So still some challenging times ahead, I think, as far as small businesses go. The rates review generally. So in the budget last year, the government announced it was going to conduct a fundamental review of the business rates system in England. The government's objective for the review is to reduce the overall burden on business, improve the current business rate system, and consider more fundamental changes for the medium to long term. So the way businesses are assessed for their business rates, their property rates, property related rates is under review. The final report is going to be published in the autumn, and an interim report on the 23rd of March. So yeah, they're doing quite a lot at the moment. There'll be a lot of new announcements coming through this month. So employer reimbursed coronavirus tests. So there's going to be legislation to introduce a retrospective income tax exemption for payments that an employer makes to an employee to reimburse them for the costs of those tests. Now, as I'm sure you know, if you run your own business and you've got an employee, if you reimburse any costs that they incur, potentially there could be benefit in kind, P11D issues there. So they're going to remove that problem in relation to coronavirus, the cost of these coronavirus tests. Coronavirus job retention scheme. So again, this isn't a new scheme. This was introduced at the start of lockdown last year. Just to recap though, the employer can claim 80% of the usual salary for hours not worked for their employee, up to a maximum of 2,500 per employee. The employer though needs to fund the employer's national insurance and the minimum automatic enrolment pension contributions. So the pay to the employees was covered, but those additional costs still need to be met by the employer. That was due to come to an end until the end of April of this year. They've extended that. So the announcement was a further extension to the scheme to the 30th of September 2021, with the level of grant available to employers remaining the same until the end of June. From July, the level of the grant will be reduced and employers will be asked to contribute towards the cost of furloughed employees' wages. So in July, the government will reimburse 70% and for August and September it'd be 60%, with the remaining 10 and 20% being topped up by the employers. I guess the intention is by June most businesses will be open again and able to afford that cost. They are, though, continuing to support employment generally, though, and they've got some new trainee and apprenticeship schemes. So the government is going to provide an additional £126 million in England for high quality placements and training for 16 to 24-year-olds in the 2021-22 academic year. Employers who provide trainees with work experience will continue to be funded at the rate of £1,000 per employee. So there is some funding going in to encourage businesses to take on trainees and apprenticeships to try and get more people back into work if they've lost their jobs, which I think is a really positive thing. We have lots of very small clients though, and I'm just worried that a lot of these measures are great if you are a growing business and you employ people, but if you're a very small business with only a couple of people in your business, then lots of these measures you're not going to be able to feel any benefit for. So I think there are some small businesses that have been overlooked a little bit in some of the support measures. Finally, from me on my initial section is to do with VAT. So again, talking about hospitality sector. In July last year, the government introduced a temporary 5% reduced rate of VAT for certain supplies of hospitality, hotel and holiday accommodation. And that's going to be extended. So that reduced rate is going to be extended to the end of September, and it will then increase at the end of September to 12.5% and remain at that level until the end of March, when I guess the expectation is it will return to normal. So, yeah, there's been lots of help for the hospitality sector in both the rate support, the reduction in this VAT rate, and to encourage people to take on trainees in the future. So my take on the support is that a lot of it's very good, but I do think that there are small companies, small businesses that don't have a lot of employees and don't have premises that haven't, other than being able to access some loans, they haven't really had a huge amount of support. So it'll be interesting to see over the next 12 months how that pans out, and particularly in our client base where we have lots of clients like that. Cash flow is key, I think, working out what your cash flow is, and we're more than happy to help you to establish that. I'm going to hand you over to Tom now.
Okay, thanks, Sarah. I think we all knew it was going to be coming. It's inevitable. Obviously, a level of paying, I think I've written down, seeing that the cost is something like £470 billion. So we've got to pay that back. The main question really was when the Chancellor was going to decide to raise taxes. There's quite a bit of debate about that. Right, but before then, there was one other support measure that we've not covered so far. So the self-employment income support scheme, helping those out who have profits at less than £50,000. So we've had 3 grants so far. The budget confirmed that there was going to be a 4th grant, which will be paid. It's open for applications late in April. A curious aspect about this, these grants are taxable, and they will be forming part of the income must be reported on the 2020 tax returns received so far. And we were a bit unsure what was going to happen about grant 4. There it covers a period from April, so it actually spans 2 tax years. Pushed it back, so it will be received in the next tax year and will presumably be income of the next tax year. Another important aspect, though, because it's now being pushed back that far, HMRC have all the 2019-20 data from the tax returns, and they're actually going to use it as well. So it will actually change the dynamic slightly, as we will now be considering the profits of sole traders over the last 4 tax years. We'll also open up eligibility for those who commenced trading in 2019-20 who haven't yet had any support. So good news for supposedly 600,000 potentially out there. But equally, I think some might have then slipped out of the eligibility criteria. Then we've got a fifth grant as well, and that's going to run through later in the year. Now, this one's going to be slightly different. Open for claims late in July, but it's actually going to be determined by a turnover test. So all the previous grants have been based upon profits, looking at the profits and the £50,000 threshold applying, determining eligibility. This one's turnover, I'm not entirely sure. There's no clues on how we're going to work out eligibility, but I did mention that to qualify, a business is going to have to demonstrate a 30% reduction in turnover to get the full grant. I would expect this will mean that some figures are going to have to be put together for the 2019-20 year and maybe submitted to prove they've been affected, but that's going to be a watch this space. I'd also just add a note of caution here with these grants. That rather like just saying there that a 30% reduction in turnover, so you've got to demonstrate you've been adversely affected. All being well, we're hoping that people will be able to function almost back to normal, maybe by the summer. So it could be that profitability is good for a lot of people who are eligible to apply. Just because you can go in there doesn't really mean you're entitled to apply. So a number of people might view that because they can apply for it, they should. Careful, make sure that you do meet the tests.
Do you think the grant income that these self-employed people will have received will count for turnover?
No, I would very much hope not, because I can't really see how that would be fair, because the grants supposedly compensating for a drop in turnover. So it would seem rather harsh then if you were saying, well, you've had the grant, so therefore you're not qualifying for future support. So I think it's got to be business revenues generated. But again, we've just got a few lines in the budget report to go with at the moment. Right, now for a big one. And when I was listening to the Chancellor talk, it's just I wasn't drinking my good tea, because that probably would have come out all over a keyboard. So corporation tax rates going up 6%. That's going to be an overnight increase. So 1st April 2023, companies with profits over £250,000 will suddenly see their the amount of tax they pay effectively increased by 30%. So yeah, big impact on those companies, and very small companies making £250,000 profits per year haven't had much support from the government, and yet they're going to be the ones essentially who are initially responsible for contributing to the increase in tax. So companies primarily being targeted as things stand. I thought that was quite controversial. Maybe that's because I'm a bit biased with a personal interest in the company, but the media didn't seem to take much umbrage with it. And then the realisation, I suppose, that it's probably relatively small numbers of people who might get upset by this, and from a lot of individuals' point of view, it's potentially a good thing. But there will be knock-on effects. This is quite a big gamble, because and it's also a complete reversal in this government's policy to encourage investment in the country, to encourage multinationals to be here, and particularly post-Brexit. And the other thing, of course, is if companies are seeing a massive increase in their outgoing, then the natural thing to do is to look to replace another cost, another outlay to balance the books a bit there. So the question there is, will this have an impact on employment? And that will remain to be seen. I should add as well that the impact won't be felt by companies that make less than £50,000 per year. So there is a small companies rate is going to be in there. It's essentially a regression. We're going back to a corporation tax system we had several years ago. And this will also involve a marginal rate band. So essentially not a degree of tapering. So if your overall tax take, a company that makes 50,000 will pay 19% of their entire profits. A company that makes 250,000 will pay 25%, and the tax rate will gradually increase as the profits increase. That does create a marginal tax band with a higher tax rate, which I believe from memory was 26.25%. Also, connected companies, I haven't seen the detail on this, but I would imagine if you've got companies in the group, they'll have to share that £50,000 rate. Yeah, it's going to cause complications again for the tax system as well. And it's the immediacy of a change, which will, I suppose, give opportunity for tax planning coming in for 2 years. But as and when 1st of April 2023 approaches, we'll be looking at ways to try and help people not feel the impact of that badly.
I think this is going to affect a lot of our clients, those that are sort of running relatively small businesses, taking their income from their company in the form of a dividend. And so there'll be quite a lot of review about that split, I guess, between salary and dividend. Do you want to pay more salary to get your profit down? But whatever way it is, there'll be less retained profit available to be distributed to the shareholders. So yeah, that's a big change. It's going to affect lots of clients and a lot of the work that we do.
It's interesting as well, yeah, because the feeling is that dividend route will probably still be beneficial, but it's not a given. And also, I mentioned it's going back to the corporation tax we had many years ago. But back then, when we had those rates of corporation tax, the tax rates on dividends were lower. Yeah, that balance and dynamic could well change. Another measure. This was something which happened after the last recession as well, post 2008. What the government did was recognise that a number of businesses have had a bad year, and they want them to be able to use their losses in a more beneficial way than it's normally the case. So, what normally with businesses, you haven't recently started, or you come to an end, you're limited to carrying back your loss for just 1 year to a previous accounting period, but that's going to be extended for 3 years. So if you had a particularly good year within the last 3, then you can get more tax relief than otherwise have been the case. And this will also impact on the rules which is, but it's mentioned there that individual companies will now be able to claim 200 loss relief without any limitations.
Super-deduction. I love this.
Yeah, that's one thing I'll say for his Chancellor. He's quite imaginative when it comes to naming things. I don't know if he was hoping he'll get called Super-deduction Man or something. But put him in a costume. What is a super-deduction? Essentially, it's not a lot different to relief we get through, say, the annual investment allowance or first-year allowances. So it's just for companies, this. So that invest in plant and machinery over a 2-year period from the 1st of April 2021 to 31st March 2023. But what will happen is, like at the moment with the annual investment allowance, subject to a cap, which is £1 million, that you get full tax relief on your expenditure. So 100% of the cost of your plant and machinery will be allowable in the year of outgoing to be offset against. There's going to be an uplift in the amount of expenditure. So 130% of the amount you spend on qualifying plant and machinery will qualify for tax. So you'll get more tax relief than actually you spent out. Just a thought on this, as we come up towards the end of the normal tax year, a lot of the tax planning advice we'll give to our companies might be, if you're thinking of spending money on capital equipment, maybe doing so just before the end of the tax year is a sensible thing to do, a timing advantage or reduce tax liability. But right now, it could be a case of just hold off for a month or so, because if you wait until April. Yeah, obviously a really good thing, and apparently a Chancellor was using that to claim that it puts us top in the league and in some kind of measure of business support. So I think that's his kind of way of balancing the fact that he's going after companies with corporation tax. He's going to hand something out first, but
yeah. Again, though, this is larger companies will get the use of this. A lot of our small clients that don't need equipment, you know, sort of feel quite sad for a lot of the small businesses that we act for. They've had a really tough time and not really given a great deal of support to help them get over it. But nonetheless, this is a positive thing for the larger ones that want to invest. And if they're going to get cheap funding, then that's a good positive thing, isn't it?
Yeah, that's right. And there's definitely a size of company that has just not done terribly well, unfortunately, out of this whole thing. Another area I've been quite growing interest really is electric cars. So clearly the government's also very keen to make sure the whole industry goes electric within the next 10 years or so, and has made that a requirement. But in the meantime, they're really trying to encourage businesses to embrace this and providing various incentives. So at the moment, if a business buys an electric vehicle or a low emission vehicle, then again, you can get full tax relief on the value of purchase via a first year allowance. At the moment, that will apply if even for vehicles with less than 50 grams per kilometre and hybrid vehicles. But to get the full first year allowance from April, so if you buy a vehicle, if you want tax relief from the full price, it will have to be a zero emission car going forward. They're also good for benefit in kinds as well, because this year it is zero benefit in kind for a zero emission car. Yeah, a business can supply an employee a vehicle, and there's no income tax considerations. That will slowly creep up. It's only creeping up to 1% in the next year after that. Similarly, vans previously, I hadn't really heard of much in the way of electric vans. I suppose there must be some small ones. But again, as the technology's improving, then I expect we'll see more and more of these. So they didn't really have much in the way of exemptions, but now that will apply also to zero emission vans. A relatively small point, we've had a cycle to work scheme, but to qualify for that, then the essentially means that the employer can provide employee with a bicycle, and there won't be an income tax consequence for that, but the employee has to use that bicycle at least 50% for work purposes, including commuting. Clearly, with everyone working at home, it's not really possible to do that. There's been an easement to the rules that will extend to April 2022.
You don't need to cycle around the garden every morning or anything like that.
No, it's just about particularly if you live in the flats, so it might be difficult. Right, research and development. So this government's been really keen to promote innovation, and actually we're reaping the benefits of that right now, because the promotion of science has been absolutely crucial for this country and what we were able to do with vaccines. And it is something that they do see, and that it was indeed mentioned that they're very, very keen to get top caliber individuals to come and work in this country as well. as things stand at the moment, companies can engage in research and development and spend lots of money and not actually get any revenue in until their ideas are proved to work, and the government will allow them to surrender their losses in exchange for a tax credit. That at the moment is unlimited. It depends on the level of expenditure for small and medium. There will be a restriction. This measure had actually been proposed a while ago and was deferred, but it is in now. So the tax relief for tax credit, which will be issued out to smaller companies, will be restricted to £20,000 plus 3 times their relevant expenditure on PAYE and national insurance. But still, that's got potential quite high value to those engaged in research and development. And there's will be the opportunity to carry losses forward if you'd rather do that. And it won't apply for those who are engaged in work that's going to create certain level of intellectual property. Research and development is actually one of the things that is going to be included in the tax consultation. They're looking at that in a number of different areas. I think there's a feeling that a number of claimants are probably benefiting from this. It's not intended, but they should be, and there are quite a lot out there as well who are engaging what the government can see is being relevant R&D, but aren't actually claiming the refund that they're entitled to. So I think there's just a slight overhaul, maybe different categories of expenditure coming in, but we'll potentially learn more in the coming months. Now, this was a bit of a surprise because I'm regularly seeing articles and murmurings about the fact that capital gains tax was. I indeed did a webinar myself the other week and speculated. To me, it seemed logical that a type of tax which you might target in priority could be a transaction-based tax, because people would have the money and in theory pay the tax. Also, with what was entrepreneurs relief, the old business asset disposal relief now, a very low rate of 10%. Just had the feeling that there would be changes, and I still think there will be, but just not now. We were worried that there might be changes announced which could have immediate effect, but tax rates remain the same at 10% or 20%, unless it's residential property or carried interest, which are 18% and 28%. The only real impact, the annual exemption is going to be frozen at £12,300 for a few years. Similarly, inheritance tax, no real change. Again, I've heard certain rumours that they might look at lifetime giving, but nothing there. Perhaps that's something which will be in a consultation later in the month. The nil rate band, it's been 325,000 for as long as I can remember, since about 2008, I think it was. And that's still going to be 325,000 right up to April 2020. So it will bring more estates into charge. And the resident nil rate band, that will remain 175,000 as well. Again, no changes through to 2020. Payroll working in the private sector, changes were made, I think it was 2018 for the public sector. So this essentially applies if you've got contractors working, maybe via an intermediary, typically via their own company, but they're providing services of an individual to an end user via a company. So the government hasn't been terribly keen on this because it's a way of potentially avoiding operating PAYE when they argue that there's an employer-employee relationship. There are changes coming in April 2021. It was meant to come in a year ago, it got deferred because of the pandemic, but these are still coming in. Essentially, it puts the onus on whoever's paying the money for the services of an individual who decides if there's an employment or employee relationship. And if there is, the person making the payments will have to deduct PAYE, or otherwise potentially be fined if they fail to rules properly. There are exemptions for smaller companies.
We've got quite a detailed video that we've done on this. It's probably, I think it's our most viewed video on our YouTube channel. So it's IL35 is what it's known as, and it's quite a hot topic. So if it affects you, have a look at that and then give us a call and talk about what you need to do.
Yeah, okay, so personal taxes. Again, not really a lot to see here. So I think talking to a lot of people that potentially there was an expectation that income tax or national insurance would rise, and also an acceptance that in the circumstances that arguably is unavoidable. They're not changing, direct tax rates not going to be changing. So there's already announced a personal allowance and the basic rate band we're going to go up very slightly, just over 0.5% in the next tax year. Then thereafter, everything's going to get frozen. So the personal allowance, the basic rate bands will be frozen over 2025-26 year. So what this does, it's a so-called stealth tax. So it will drag more people into tax. What the news was saying, you know, there'll be 1 million more taxpayers than would otherwise be the case. But it's only as people earn more they'll potentially. So is that fair? That's debatable. Maybe one thing I just don't get with this is why raising income tax seems to become a taboo. I keep looking back to try and find out when the last time, let's say, the basic rate of income tax was increased. I think it predated Margaret Thatcher back to the mid-1970s. That's an extraordinary period of time without an income tax, and no one seems to want to break that trend. But I would think, given self-tax reportedly is like bringing in about 6 billion, income tax is the biggest source of tax we have in this country, and we've got 470 billion to pay back. So can you address the budget deficit without raising income tax or national insurance? How long can you go until you do?
There might be more information on that on the 23rd of March, I guess, when they release the next round of consultation. Maybe that's one of the things that they're waiting to do slightly later. Time will tell. Use of Home's Office.
Yeah, I saw this slide. I have to admit, I thought, what's a C19 Home Office expense? I was thinking it was some tax jargon, and I realised, oh, COVID-19. Yeah, this is a bit similar to the coronavirus testing. So we've spoken about the fact that you can get a £6 per week allowance when you're having to work at home. But on a similar basis to the testing expenses when it's funded by the employer. If the employer is providing employees with equipment from enable them to work from home, in theory, that could be a benefit in kind. But the employer reimburse expenses for the cost of home office equipment now, you recognise being regarded for income tax. Pensions, that's something else. It's everything being frozen again, so annual allowances. I did wonder again, because if you're looking to balance the books a bit, then the amount of tax relief that's given out through pension contributions is significant. Still a £40,000 annual allowance for most individuals. And so I did wonder if that might get targeted. It's being frozen. The main one I think that people are slightly concerned about the fact that lifetime allowances is frozen. That can have more of an impact, particularly taking into consideration how pension pots grow, natural investment growth. So it could bring more pension pots into charge. SDLT, so at the moment, first-time buyers won't pay, or any buyer of a single home, as long as it's not an additional property. If you're moving house, there's no SDLT on the first £500,000. That was due to come to an end at the end of March, but that, what they call the SDLT holidays, being extended by another 3 months, and then the band will, the nil rate band, 1,000, and then that will apply for 3 months, and then it'll be 105,000, returning back to where it was 1st October. And there had been a big worry that potentially a lot of people looking to conclude deals in the last couple of months, and it was market, a sudden dramatic change in the outgoing for purchases, and so it's hoping it would spread out demand and prevent rather nasty market trends, but we'll see. Change helps in the course of the year.
Great, thanks for all of that, Tom. I think we've gone through the main changes and announcements, so I'm just going to, very conscious of the time, so just going to quickly rattle through the last couple of slides that we've got, some other announcements. So universal credit and working tax credits. So there was an increase that was temporary, and that's been extended for a further 6 months on universal credit, and a one-off £500 payment for those eligible for working tax credits will be there to provide extra support over the next 6 months. Venture capital schemes. So the government will continue to support social enterprise that are seeking growth investment by extending the operation of social investment tax relief to April 2023. This will continue the availability of income tax relief and capital gains tax holder relief for investors in qualifying social enterprises. So yeah, it's not something that we see a huge number within our client base doing that, but it is a useful thing, and it's all been, looks like it's been extended for a further period of time, which might benefit some. Mortgage guarantee scheme. So this is going to be introduced in April, so I guess it sits alongside the stamp duty holiday, I guess, doesn't it? And trying to get and to guarantee to lenders offering mortgages up to 600,000, which even where we live, I think is quite a high level of mortgage. So I think throughout the UK, that's a really positive thing. Hopefully keep the housing market moving over the next period of time. National minimum wage. So just some notes on slide there about what the rates of the national minimum wage and the national living wage are going to be. And for workers aged under 23, the government has announced smaller increases, and the increase of 2.2% will be extended to 23 and 24-year-olds for the first time. So if you're running payroll and you've got people on minimum wage, I think it's been extended for a longer period. So do keep a lookout for that. Well, like I think I've said on earlier webinars, we've had experience of HMRC's national minimum wage unit, and quite difficult area and one that is prone for clients sometimes to get wrong because they don't appreciate what things impact. So if you ask your employees to buy their own uniforms, for example, that effectively reduces what their hourly rate is, which might mean that you're paying them less than minimum wage. So you need to watch out for things like that. And then I think this is the last slide almost, FREEPORTS. So the government consulted on proposals to create up to 10 FREEPORTS across the UK last year. So it's now proposing a range of measures covering customs, tax reliefs, planning, regeneration funding, innovation to create FREEPORTS at national hubs for global trade and investment across the UK. And as we're on the south coast, I think there's a possibility that we might have some near us. Did you say that yesterday, Tom? There might be some in the Solent.
Yeah, the Solent area's got FREEPORT status, and businesses within the geographical area that's assigned around there. So the Portsmouth area and to the west, there'll be some quite good tax incentives for businesses located there on certain types of expenditure.
Good news. Okay. And then finally, plastic packaging tax. So draft legislation issued to establish a new plastic packaging tax. The new tax that applies to plastic packaging produced in or imported into the UK that does not contain at least 30% recycled plastic. So watch out for that from next year. Ban vehicle excise duties, some changes to that, and contactless payment card limit is going to increase to £100. I think that's an immediate increase, but the systems might take a little bit longer to catch up. That's it for today. I don't think, well, I've not got anything else to add. Have you got anything you'd like to add, Tom?
No, nothing else from me, but if anyone out there has got a question and want to pop it on the chat. Yeah,
please do. So we've got several social media pages and lots of information on our website that you can access there. But obviously everybody's personal circumstances are a little bit different. So do get in touch if you want to have a chat about anything that's cropped up today. Keep an eye out when we do a regular weekly webinar. They don't always last this long. Try and aim to do for 20 minutes, but there's big week, lots going on this week. And by the sounds of it, we're not done yet. More information and guidance will be coming out over the next couple of weeks. So watch out for any updates there. So thank you for joining us, and hope to see you for the next one. Thank you.
Yeah, goodbye.